What's up, guys? Crypto Wolf here. How you guys doing? In this particular video, I'll be sharing with you 5 common crypto technical analysis mistakes that beginners make. Even intermediate traders make the same mistakes. Even sometimes, even pro traders make the mistakes because we're all humans. Trading is not easy. Believe me, trading is hard. So the earlier you realize that, the better. Trading is very difficult. So if you're ready, let's dive into it. The very first mistake beginners make, is that they use just one time frame. If you want to get absolutely roasted by the market, just use one time frame, because what people don't realize is that a buy on one time frame may be a sell on another time frame. So you just have to be careful what you do. You have to make sure you look at your trades across multiple time frames, depending on the type of trade that you want to take, whether it's swing trade, it's day trade, or scalping. So I've actually created a video on that, so I'll link it at the top of this video. Please check that out. So if you really want to be successful at trading, make sure you use multiple time frame. So it's called multi-time frame analysis. There's actually a book on it. So it's recommended that you use more than one time frame. So check out that video. So the next mistake they make is they use only one indicator. There is no magic indicator in the market. Believe me, you have to use more than one indicator. Like me, for instance, I use a whole lot of indicators, but I have the favorite ones that I use. I have the ones that I use the most based on my setup. So I use MACD divergence by David Tech. I also use MACD histogram divergence. This is a custom indicator that I built for myself. I also use the major volume divergence indicator because I want to see if there's a divergence between volume and price. This is also a custom indicator. Other block detector, because other blocks act like an area of dynamic support and resistance, which is very important when you want to place trades. I also use this other block finder, RSI and Andrews pitchfork indicator. This is a custom indicator to RSI divergence. This is TradingView's native indicator. Support and resistance by LuxOrgo, support resistance dynamic, trend zero, and unusual volume and support defense. This is also a custom indicator that I built recently. If you want it, I can always show you how these custom indicators work, but I use around 3 indicators, and if I want to take a trade, I have certain conditions that it has to go through. Let me just quickly walk you through my setup, how I will do it. I'll add the MACD divergence. um, Take for instance, I want to know what I should take in this trade. Okay, so looking at the MACD divergence, it looks as if we're going into the sell side. There've been a drop, most likely because they just released news. They just released a US I think unemployment claims at the moment. So this is a news based drop. So we're entering into sellers momentum, but we could switch to the 4 hour and look at what's really happening. Okay, you could see that this is already showing that we are still in the seller zone, but this particular trade is already showing us signs of an ascending triangle, which is Bitcoin's most effective chart pattern. In case you don't know, I've been doing this for over 8 years, so I know. So this is an ascending triangle, super effective, and it works most of the time, but not all the time. So this is already giving us that vibes. I will just have to wait for this particular momentum to turn to the bullish side, and I'll take a long position. So you see that, that's it. So I would, if you want me to make a video about my complete setup, including the SOP, I will send it to you for free. It's a PDF document. I've had it printed, which I use on a daily basis. I can walk you through it. It's absolutely free. Don't pay for anything. Anybody who is actually trading well don't really need your money. That's the truth. So the Second reason is they use one indicator. You should use more than one indicator. I could also use volume to confirm this. Just add a major volume divergence. Let me see if the volume is on the bullish side. You could see anything below zero means sellers are in control. Anything above zero means buyers are in control. You could see although buyers momentum have dropped, they are still in control. So we're still safe to take a long position on this. So you see that. So the next mistake beginners make when it comes to crypto technical analysis is that they are thinking support must hold. That's not true. Support can break, and when support breaks, it becomes resistance. So in case you're trading and you want to place a buy at support and you think it must hold and you don't put a stop loss, believe me, the market is going to destroy you. That's the truth. As in, so even if you're buying at a support region, just ensure that there is stop loss on it, and don't think that because it's an area of support it must hold. It will not hold. It might not hold. So that's not enough yardstick to just place a trade and leave it, believing that support will defend itself. It doesn't work like that. Sometimes support can get broken at the twinkle of an eye. So the fourth mistake people make is that they set stop loss wrongly. So a lot of people, their stop loss is too tight because they actually don't know their numbers. Imagine somebody probably using $1,000 to trade and the stop loss is just $2. That's crazy. So in such a case, stop loss should be at least $10 to $20, at least $10. Ideally, it should be $20 because $20 is 2%, which is okay. So, but anything less than that, less than 1%, 1 to 2%, you're trading with $1,000 and your stop loss is just $2. It's going to get easily triggered. So if you place your trade at a support area, just ensure that your stop loss is below it. Let me give you an example. Take for instance, you were looking at this. Let's say you were looking at this, and just because it had been touching, you were thinking there's a possibility that it was going to go to the upside, and so you decided to buy at this area of support. So the moment you see it break, the moment it breaks, your stop loss should be below the area of major support. That's the best area to place it, or you could place it at an area of order block, just below the area of order block, just in case, because a support break most times indicates that the trend is going to go lower. So you don't want to be in a trade when it breaks support. So you just put it on below the support area. So take for instance, let's say you bought at this point, then your support should be somewhere at this point. So immediately it breaks, you're out of the trade. So that's the fourth mistake people make. They set their stop loss wrongly. The final mistake a lot of people make is that they worship chart patterns. Remember what I said earlier? I know a lot of chart patterns because I've been trading for a long time, but I don't have 100% faith in them. Even for the chart patterns that I know BTC respect a lot, like the ascending triangle, the double top, double bottom. If you look at this is double bottom, and you could notice it just spiked to the upside. Those are three BTC's chart pattern that are the most effective, but they are not 100% accurate. They are not 100% sure. They could break depending on market conditions. So don't worship chart pattern. Just because you discovered an ascending triangle doesn't mean that you should place a long position without stop loss, because that particular ascending triangle could break to the downside and you'll be in a huge loss. So this is Crypto Wolf. I'll see you in my next video. Bye.